Hello traders, and welcome back to my channel. It's Mahod. Are you doing good? And for me, I'm doing good, and I thank God. So in today's video, I want us to learn about how to map out order blocks correctly. I know you know how to map out order blocks, or you also don't know how to do it. And I'm here for those who don't know, or those who are in doubt if they know or they don't know. Okay, I know when it comes to mapping order block, everybody has a way of doing it, and I just want to show you a very simple way how you can map out your order blocks. And to start with, let's head over to daily time frame where I am right now. And as you can see, the market is reacting from that supply zone. I'm analyzing Euro USD, and price has reacted from that supply zone not once, not twice, meaning that the sellers are strong. That's why anytime the sellers try to go through the supply zone, they are pushed back. Okay, so it means that the sellers are a bit strong. That's why the market is tapping and going back, tapping and going back. Okay, but at the end of the day, the market will push up though. Oh my God, it's very early in the morning. I don't know why I'm even yawning. Okay, so remember, we are here to map out order blocks, and this is what we call order block. You see what I'm mapping? For an order block to be valid, it must have FVG or fair value gap. Okay, some people will call it fair value gap, others will call it imbalance, and it's one and the same thing. Okay, so for your order block to be valid, whether the market is in an uptrend or downtrend, it must have a FVG. Okay, for me, I don't trade ranging markets. That's why you'll rarely hear me mention about it. I only deal with bullish and bearish markets. Okay, that is uptrend and downtrend, right? So as you can see, I have mapped my order block. And for mapping order blocks, you map from the body to the wick. I mean, you include everything from wick to wick. If the candle doesn't have a wick, from body to body, okay, you literally map out everything. There's no like I will map out the where the wick started or where the wick ended. Don't. It's I mean, SMC, for me, I trade SMC strategy, and SMC is one of the simplest strategies anybody can understand. So don't complicate yourself. Don't complicate words and terms that will not help you at the end of the day. Just know you map out everything, both the candle wick and the body, right? So on, let's head over to 4 hours, and as you can see, we have this range. I've just mapped the range. I know today we are not discussing about ranging markets or origin. A range, mostly if you see a range, sometimes the range can be an origin, but whatever I have just erased was an origin, and that's where you can see we got an order block, this one. And I'll create a video about origin, because we get order blocks from origins. Okay, you can't get an origin from an order block, but you can get an order block from origin. I don't know if you're getting me or if I've just confused you. You get order blocks from origin. There has to be origin, where the market is coming from. Then you map out where the market went to break structure. Okay, so let me just go back a little bit so that we have a couple to map. And this is the order block that we have. So this is the FVG I was talking about. Whatever I am typing right now is the fair value gap. Remember, we said that for an order block to be valid, it must have a fair value gap. Are we together? I hope we are doing good. Okay, let me just type it here: fair value gap or FV imbalance. Okay, so if your order block has no FVG, just know that it supports or resistance. If it's a impulsive move, or if it's in a bullish market at the impulsive start of the impulsive move, just know that's the support. If it's in a bearish trend and it's on the start of the retracement, just know that is resistance. Okay, so let's keep mapping out order blocks. I know maybe for someone is like, how do you identify that it's an order block? How does it, why does it look simple yet it's not simple? It's through practice. Let no one lie to you that there's a magic which you can apply and start mapping out the chart. Well, you have to be consistent. You have to give it time. It will take you years, not even a month. Nobody will teach you Forex to go and start making money immediately. You are just given the skills, then you go practice and find your niche. Okay, so as you can see, the price has been tapping the order blocks and pushing up. Right here the market did not come back, but here at least the market tapped. Okay, hope you can see what we're having. I'm also analyzing Euro USD so that at least I say if we can get an entry for today, either today or tomorrow, whichever day the market will come to our point of interest. And I'm sure you'll notice as some order blocks have labeled them POI. POI to me means point of interest. That's just an abbreviation, nothing too complicated. Let me zoom in so that you can see. Somebody complained sometimes back that I don't zoom in. At least today I'm trying. I'm sorry if you didn't see the video very clearly. So one thing you should realize is that if you see an order block on the daily time frame or on a higher time frame, it doesn't mean that going down to the lower time frame it will be an order block. Sometimes you'll start with an order block. As you go down the time frame analyzing, as you go down analyzing, you'll realize that what was an order block may turn to an FVG or support or resistance or demand or even supply. Okay, so for every time frame you have to keep adjusting your mappings, because you can't just say, not unless you take your entries from daily time frame. And even if you are to take the entries from daily time frame, there's no way you'll analyze daily time frame and take the trade. You have to start from a higher time frame like the monthly, then you go down to weekly, then you land to the daily. Okay, and when I talk of daily, I mean one candle. When we talk of daily time frame, it means for each and every candle you see, it was formed within one day. 15 minutes candlestick means the candle was formed after 15 minutes, then another one was formed. Okay, so for here, this where the order block is. As you can see, between the order block and the line at the bottom, there is so much space. And I imagine if you placed your trade at the order block, then you have to extend your stop loss so that it accommodates everything. It's so risky. It's not proper risk management. So as you can see here, what was an order block has changed to FVG, and what was an FVG has turned into order block. Okay, let's keep mapping. Remember, we are not mapping out break of structures. That's where you can see I'm just mapping out the order blocks alone. I'll do a video on FVG. I'll also do a video on break of structure. Just a bit tuned. Stay tuned. You'll see so many videos drop today or tomorrow. I have around 5 videos that I have to post between today and tomorrow. So just stay tuned, and I'm sure you'll enjoy everything. You'll learn something, and that's the essence. In Forex, you keep learning every single day. And what I keep saying, if you understand a certain strategy, don't start jumping to other strategies simply because you saw somebody making money with that strategy. Every strategy can give you money. We all approach the market at different angles. That's why you'll find that someone is buying from where you are selling. Okay. Something else, someone asked me something about how do you know that the market is gonna react from there? If you have a couple of order blocks, how do you know that the market will come and react from this certain order block? There's no magic. Just use your fib retracement tool, or you go to the farthest order blocks. For me, I prefer going to the farthest order blocks. And even when I was starting, that's what I used to do. I used to wait for the market at the farthest order block, and it used to work for me sometimes. Though even if it was working, I could analyze the market very well, map out very well. And when it comes to placing the trade, I'm so afraid because I don't want to lose my money. And if I place the trade after a small pinch of profit, I have to close that trade. That's what I really struggled with. And I hope you are not in that category. So, like for this case, where the order block is too wide, you can say that you'll map out order block from this from there to here. It's too wide. It's too wide. You can prefer to use gun box because it's divided at the middle horizontally. So it means where the horizontal line is where you wait for the market. Okay, it's that simple. So let's go back to what I was analyzing. And when you check at the daily time frame, you'll realize that the market, the candle had a bit of selling pressure, meaning for our market to buy, it has to sell. And it's something that I learned along the trading journey. Nobody will sit you down and start telling you check the daily candlestick. If it's too bullish, just know the market is gonna buy. You have to know how to read the market structure very correctly, and I think I did a video on that. And in case you've not seen it, I'll also drop another video about the same that is come next year, because I understand we all want to know this thing, this forex thing. And don't let anyone pressure you. Oh, I'm making this amount. Oh, I'm making this amount. It depends on how much you bring to the market. It also depends on your capital. and it depends on so many things. Okay, so let no one pressure you. Take every step at a time, and eventually you will learn everything, and you'll be able to analyze the market even better than me. So it's my hope that at least you have an idea or a clue on how to map out order blocks from what we've just mapped. By next week, I will link an Instagram page where you can, sorry, not Instagram, Telegram group. It's a public group where you can join, watch some playouts, and learn something. Okay, if also you're interested in classes, I check the email on the description box, and I also have my number attached to the description box. Okay, thanks.